All right, it's Wednesday. Market opened just here. We push higher immediately. Let's see how we can manage today. Um, Shortly yesterday, I caught this sell, and in all honesty, I got little bit of luck with closing my full position here because I was like contemplating whether or not I should target this pull. So because market was moving a little bit slow, it was going well to my favor, but I like due to the time and such things, I just decided to close a trade here. And you can see how I got a little bit of lucky because this is actually the exact turning point where market would have then ran to my break-even stops. So in short, yesterday was very good for me, and let's see what we can get today. Market opened 6 minutes ago, so I'm just a little bit late, but it's so totally fine. I don't usually take trades immediately at the market open, and as well, when you look at the 4-hour chart, I see that we have put on large push lower. We are trending downside anyways. I see this as a retracement for possible move back lower. I'm interested in this consequent encroachment level of the price leg. That's the or that's not called consequent encroachment. That's just that's just the equilibrium. Sorry, but yeah. These red boxes are new day opening gaps. The blue one is new week opening gap. So we'll see if market is willing to trade back to the new week opening gap. I don't require it. I would see this fair value gap here as a potential turning point for price, which would mean for me that this maybe market would like to tap into that once more, liquidate the hourly high here, and then turn lower. Now that doesn't necessarily need to happen because we are about to form 1 hour fair value gap here, which could mean that because we have so large range down, market could form the gap, respect it, and then just gyrate the whole day with price action, something like this. So that could be totally reasonable outcome of today's price action. But that being said, I'm not looking to take longs here. I would be still favored of shorts, although if we put on a fair value gap and put very nice signatures in price, I will probably try to participate in some way. We'll see how that kind of works out in 20 minutes. I will wait probably for the at least to 950 macro, which we are trading right now at the 930 opening candle of the 15 minutes. So that's the case here. Comparing NQ and ES, NQ more bearish than ES. Definitely something interesting going on in here, but yeah, we liquidate the high here. This is the buy side liquidity that we sweep in for our context, and that is an important liquidity pool that could cause price move lower. In ES, I would want to measure this wick because you can see that there is large push lower, but there is actually no fair value gap. So what I like to do is measure the wick here. And so that's the 50% of the wick. And looking at 1 minute chart, we actually respect the 50% of the wick with closing below that and rejecting immediately lower. So this is the case in here. Let's check out Forex Factory real quick. There is, yeah, so I suspected that we got the CPI. This is definitely not the largest CPI I have ever seen, but this is very heavy. Like comparing to these candles, this is like 100x. So Um, One reason not to trade CPI, like generally speaking, you don't want to trade any red folder news event. But let's say if I have taken a setup and I just need to hold it over some uh, George job openings, or what do you have? Like some random, even like tomorrow PPI, that would be fine to hold over if you have proper room for your stop. So let's say I took a setup, very nice looking setup like this, and I have my stop somewhere. If the trade looks like this and I'm targeting somewhere here, and let's say we are trading down here and we got the PPI, I would be willing to hold over the PPI, because even if it goes heavily higher, I'm not going to get slipped out of the trade very badly. And there is high potential of the PPI to push to my TP. But yeah, so let's just make quickly clear of what is my plan for the day. So I want to mark out open range gap. That's the 16-hour candle. There you go, and that's to the high of that. Opening range gap is fairly large. I mean, it's not large, but we do have a little bit more size than a couple of days prior. We haven't had very large opening range gaps recently, but we'll see. We'll see if we can actually put on like an SMT with the high. Let's say because NQ is much higher than ES. NQ is even fairly close to that high. ES is not. So let's see if NQ would maybe like to sweep the high here, put on SMT, and I would go short. But yeah, definitely due to the CPI and so large range candle after the 8:30, market hasn't broken the high or the low of the candle. So I would want to, because I'm a high time frame bearish, I would want in this scenario us to sweep the high and go for the low. And that's my ideal here. I'll mark out the open range gap as well for the NQ, and then we are basically ready for all my annotations on the chart. So we're trading above opening New York open, 8:30 open and midnight open. That usually means that maybe market wants to come back to one of those or even all of those opening prices. So this could be like manipulation higher to my understanding, and that's how I kind of read markets anyway. So if we display slower now, that would be very annoying for me, because I want to see the sweep and I want to see the SMT, and that's only going to happen if ES or NQ takes the high. Now NQ is not going to take the high. Let's keep it 1,000. Let's keep it a buck. It's not going to happen. But with NQ, I would feel very like heavily uncomfortable taking shorts if we don't take the high. That would be my opinion of the market today. So let's see if I'm actually, here's the case. This looks like a short to me. I'm not going to lie, but I just feel this reluctant, emotion of not wanting to take the trade, because it's not actually fully, meeting all my rules. And these are annoying situations because, market could easily give this setup and play out perfectly, but this is one of those situations where I have to stay real with my trading and not break my rules, because there are going to be days when if I just follow my rules, I'm going to save my ass because market would run against me. So this is the first percentage fair value gap. If we inverse that, I would be willing to take even a step for the high here and go for the long. So that could actually be a possible, like, likely scenario of where market would want to run, you know. So I'll just measure out. That would be around 1 to 1. So I don't really like the risk in terms of the fact that, you know, 1 to 1 risk to reward ratio isn't the greatest. And this is bearish signature in price, but I cannot utilize it because this is not something that I'm willing to participate in when we haven't swept the high. Now ES is totally different situation, and I would be willing to take this actually, because we are so far off the high and we are bearish. So maybe I'm now starting to actually consider taking the ES trade, but you know, I'm still thinking that NQ could run the high, and that could be, in that situation, ES could go for false move above these highs and then run lower. So I'm deciding to be without the trade today. In this instance, I'm waiting for better opportunities because, you know, I know it's frustrating when you see the setup and you want to take it and it plays out. And especially with NQ, I can rationalize why you shouldn't take that. But with ES, the trade just looks fine and good. So something like this would be nice. And if NQ looks something like this as well, I would probably take this. But looking at NQ, I understand that these highs, this is not something I want to be part of, and simply just cannot touch the setup, even though it looks good and it kind of works. Is likely to work in my favor, but you know, new possibilities come every day, and you know, if I don't take a setup today, that's totally fine. I will probably find like a decent setup tomorrow or something like that. And you know, as a trader, you are professional risk manager. You are professionally missing good setups and professionally managing your risk in a proper way, which means that you cannot take every single setup, even though they look good and you would like to be a part of the trade. So here, I could have taken this, and it would be looking very good and satisfying right now. But in all honesty, I would have taken the ES trade rather than the NQ because of the overall bearishness of ES. But yeah, I will just concede the fact that I missed this setup because I'm actually responsible trader and I'm not willing to risk my money on this for specific reasons that I told you about. But yeah, so this is something I need to show you. So look at this. We got the 15-minute chart. This 15 minutes fair value gap. So I'll mark that out. 15-minute fair value gap. And you see how we drop into that perfectly. Now I'm bearish, but we got relative equal highs here. We got some fair value gap here. You know, trading into this 15-minute fair value gap could easily, in my opinion, spark a move higher, especially because look at this high in here. This fair value gap doesn't print in just somewhere randomly. It's printing on top of a fair value gap in here, and we are leaving actually data week high, which is large liquidity pool untapped. So now that we are bouncing off the 15-minute fair value gap, I'm actually more bullish in this shorter time frame to target the high in here. So that's the idea in here. We do need to see like a proper price action higher to actually support my idea. But you know, if I was in this sell, let's say I took the sell in here, I would have taken the break even position and most of the position off at here. Not because market cannot drop heavily lower, because it can. We are high time frame bearish. Market could easily just continue dropping, but this 15-minute fair value gap could easily spark another move higher before like a bigger drop. That's just how I see it, and I want to see some evidence that price could possibly want to come back to the highs. It doesn't need to, and this is the reason why I'm not participating into any trade currently. But ES as well, we do have large range to drive lower. Like we could, ES could put on like a large displacement lower. So probably at this point, I'm not expecting like a market switching back higher anymore, because this is a little bit too large move, and especially when we are like close to flipping, inversing this 50-minute gap. I don't really expect market to have another massive move higher today. Although, to be honest, if we get like a proper volume, but if the volume stays around same like this, I don't think we are going to get very efficiently back up here. So I'm probably just not able to participate today in the market, even though I wanted to, and I kind of knew that overall direction of the market correctly. Like I called these shorts. It was just that I wasn't comfortable with the fact that we didn't really sweep the high, and maybe that's something I could become better with. You know, maybe I could have been just able to take this ES setup, because ES was so much lower than NQ that this setup actually doesn't look that bad on ES. With NQ, it's looking like a little bit like 50-50. Do I want to be a part of it? So yeah, it's presenting a lot of bearish signatures, such as, you know, market retracing back to this first fair value gap, but respecting the consequent encroachment of that, and then putting massive rejection lower. Now we're back at the 8:30 opening price. So, but still, 45 seconds to the close, and market is looking to respect this 50-minute fair value gap. So this could spark a move higher. So I'm keeping that in mind. For now, there is still, like, even though that could look like a nice, decent long tech, that could be technically a trap because of this recent bearish price action. So I need to see like a proper evidence for markets willing to push higher, which in this context I want to see like high being made, then proper break of that high, and then I could consider long. Like I'm not willing to execute on some weird inversion here. Like something like that would be totally way too aggressive in this certain condition. But yeah, not willing to take anything here. All right, so now we're our how I would say this. We are possibly going to see break of structure higher here, or hopefully we see that. This would be a breaker because of the sweep lower. There's no SMT, so that's just a. I will mark that as a breaker like this. Okay, so I want to see close above this and bullish for rally gap on top of that, and then if that happens, I'm willing to take a trade. Simple as that. So let's see if we can form a fair value gap here. At least we are pushing heavily higher currently. The stop loss would need to look something like this, somewhere on this wick. Certainly. So let's see if we can spark a move here. 1 minute candle closes. Alright, so we have a fair value gap. I'm going to take the entry on this candle high if we can revisit that. Would be heavily frustrating if we just now went higher without any proper move lower. That would feel like missed trade. Still currently waiting. Trying to get the retracement. I'm not willing to enter into something like this. Like this would be just bad trade. But at that high would be proper risk to reward to in my opinion. So we'll see if we can put on like a move now. Consequent encroachment of the price leg is actually quite far down here, so if this 3 minute fair value gap forms, I will probably just try to enter from there. Then I try to shrink my stop to looking something like this. That's definitely something I will look to do. Let's look at the 3 minute chart. So that's gonna close in 1 minute. That candle. Unfortunately, we are not seeing very good retracements. I have the bad feeling that when I then take the trade, when it retraces, it's going to retrace like heavily. Alright, so I took partial entry here. I would preferably like to see something like more retracement, and I'm going to take more of the same trade in. Well, let's see what happens. If it doesn't give me another entry, then this will be just around 1% gained, which is fine. But I would like to see, like, be able to risk a little bit more. But sometimes this just happens where price likes to leave a little bit aggressively, which means that I'm not being able to take the trade with full position size, because taking the trade with my regular position size up here requires a little bit more risk and a little bit worse risk to reward ratio that I would like like to have. So that's just something I need to mitigate. So I can't take the trade with full position up here, because the entry that I took is here. So now I'm just waiting. We put on the 3 minute fair value gap here. So excuse me, I will just I will see if we can get more, like, add to the position. At these lows here. So definitely trying to see that. If it doesn't come back down here, I'm still feeling fairly good, because and this is the reason why I take the partial entry, because I don't need to risk that much, but I can still be a part of this trade if it kind of misses me, because previously I've missed a lot of setups, and I just feel like it's better for me to be part of the setup than not, because when I feel the conviction, I just want to be a part of the setup, and there has been way too often there has been the time when I kind of miss the setup. So that's why I want to take the partial entry, to be a part of the trade. If it is going to happen, then I'm at least going to make some money out of it. It's approaching my preferred entry area. So let's see, I'm hovering my mouse on the buy button. Okay, market tapped very low quickly, so I actually got very good fill here. So we got the fill around here. So that's something. I don't know how comfortable or convicted I'm with this setup, because we are still bearish, a high time frame. So there is certainly a little bit more risk, I guess, behind this idea. But I'm going to hold this, because this was my idea for this. So we are bouncing off the 50-minute fair value gap. Yeah, I don't like how the first fair value gap is respected here. So that's certainly something to be a little bit concerned about, I guess. But if I take a loss here, that's what's kind of soothing me, because if I take even if I take a loss here, that's totally fine, because I've been taking very good trades and I'm well on profit on my funded, so I don't need to worry about taking a loss here, and I just trade how I would trade. I don't know how to better explain that, but I'm fine with this position. This is not like the A++ position, certainly, mainly because of the fact that the 4-hour chart kind of looks still bearish, in that this could easily just reject lower, considering how we have been moving. 50 minutes still looks like we could easily put on like a trade up here and then reject, and that's why if you catch a move up here, you shouldn't ever, in this kind of situation, try to hold higher, because the possibility of market moving higher from here, yeah, it is, I guess, there, but the possibility of market, if it moves higher, it's probably going to dump after. So that has to be kept in mind. I'm considering, yeah, I don't know. The thing is that I don't really like the retracement that we put on here. This massive candle, and then we're kind of gyrating here. But the market is respecting the equilibrium and the fair value gap here. So I shouldn't really, I don't know. I'm trying to adjust my where I got the entry. Yeah, it's pushing way too quickly lower. This is what I meant. I had a little bit of a bad feeling about this because of the recent bearishness in the market and stuff like that. So we'll just have to take the L if that's something that market wants to give me. But yeah, that took half of the position out. So I had one stop loss here, and I have another stop loss a little bit further down the wick, or like somewhere here. But certainly, I'm not enjoying this price action. Yeah, it's about to take me out. Yeah. So yeah, I moved the rest of the stop as well here because I don't want to be part of this trade. It didn't really look good after we inverse this gap. It's just not looking good, man. So yeah, I guess today I just got a little bit too fixated about these highs, and yeah, I've been trading well recently, but the price action here was just a little bit confusing for me, I guess. So I'm going to end the trading day here because I don't want to take another loss. I think the day has been a little bit confusing in terms of price, and we haven't actually moved much. So I'm just trying to consider my risk and consider my risk in the market. I don't want to risk more money in the market because today we are not looking very good, in my opinion. If you are a good trader or very experienced trader, maybe you caught some shorts up here. Maybe you understood that this long wouldn't be a very good idea. And yeah, I can see the reasons why it isn't a good idea to go long. Namely, the higher time frame bearish bias, equal highs here. We could easily just reverse and move lower. First fair value gap being respected like crazy. Those are some of the reasons why maybe market wouldn't want to go higher, but I just took the long because that was how I saw market, that there is likelihood of market wanting to go for the highs, and that wasn't the story today. But I found success in the market with these ideas that I have had. So every trader is going to experience losses. So that's just how it goes, and I'll see you tomorrow.